One highly impactful aspect of implementing infinite banking is the dividend. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our EncycloMedia series, we're going to be evaluating the differences between direct recognition and non-direct recognition when choosing a mutual life insurance company with which to own a policy for the purpose of implementing infinite banking, as described and codified in R. Nelson Nash's book, Becoming Your Own Banker. So once you've worked past picking mutual life insurance companies for the ideal companies to own whole life insurance that's been properly structured for the banking purpose with, there are two types of mutual life insurance companies. There are direct recognition companies and there are non-direct recognition companies. Let's notice the distinction. Direct recognition companies directly recognize when you do or do not have outstanding policy loans when it comes to dividends. So if you have outstanding policy loans with a direct recognition company, which certainly may be the case if you are using your policy for the banking in your life, if you are implementing infinite banking. With the direct recognition company, if you do have an outstanding loan, they will take that into account when it comes time to reward you with a dividend. Once they've announced dividends for the year, and all the best companies have been paying dividends for over 100 consecutive years, direct recognition or non-direct recognition alike. But when the dividend is to be paid, if you have outstanding loans with a direct recognition company, it can impact the amount that you would have received if you did not have outstanding loans. Therefore, a non-direct recognition company is a mutual life insurance company that whether or not you have outstanding policy loans, they will still award the dividend as if you did not have any outstanding policy loans. So at the end of the day, there are those that will say, of course, that you must do, and that's going to be incorrect. That may be the preference that you prefer to work with non-direct recognition companies. And mathematically, there are the advantages, such as they are. If you can receive a greater dividend, whether or not you have outstanding policy loans, that is a plus, to be sure. That still, let me make a couple of points here, that still is simply one aspect, not to be disregarded, but it is still all the same, one aspect of the internal workings of a policy. I myself own policies with direct recognition companies and non-direct recognition companies. As long as it's a mutual life insurance company that's been in business and profitable and paying dividends for over 100 consecutive years, there are great products and these are great companies and they have great customer service and you can implement infinite banking. Let me repeat that again. You can implement infinite banking whether or not you are using direct recognition companies or non-direct recognition companies. I myself, my oldest policy, the first policy that I got, is a direct recognition company. Now, knowing what I know now, would I have chosen for that to be so if I could push a button and would be different? No, I would prefer, it is preferential to work with non-direct recognition companies. However, ask me today, I've practiced infinite banking for the better part of a decade now. Ask me today which policy is my favorite. It's the oldest policy. And it's the direct recognition policy. It's my favorite because it's the oldest policy, because it's the most efficient. We've used that policy, direct recognition company or not. They've got great customer service. It's a great company. We're paid dividends every year, even though dividends are not guaranteed. We've experienced dividends every year that we've had this policy, of course, and we've used this policy. We have implemented infinite banking with this policy. We have used that particular policy to do things like pay off student loans, pay off credit cards, finance things that we do as a family. So it's my favorite policy because it's the first one that I had that was built for the purpose of infinite banking with a great mutual life insurance company, even though at that time I didn't even know the difference between direct recognition and non-direct recognition. All that to say, I do hope that this is helpful for you if you're vetting this concept of infinite banking. Mathematically speaking, there are the advantages, mathematically alone, of working with non-direct recognition companies, but there are some great companies that are direct recognition, and they are profitable, and they have great customer service, and they are a great, solid, strong, foundationally built company. They've been profitable for years, much longer than you or I have been alive, okay? And they're both great for implementing the infinite banking concept. So I hope that this has been helpful for you. If you're vetting this idea of becoming your own banker, I would encourage you to check out my free introductory presentation. It's on our website, durhamtalents.com, also on our YouTube channel, and then book a free consultation call with me. My calendar link's also available on the website. I'd love to walk through what it could look like for you to implement the infinite banking concept into your household or your business or your investing. But this conversation's been a great pleasure for me. I look forward to our next one. Have a great day. Take care.